Hey, how's it going, guys? Benny Childs, founder of the Teach Me the Fish Effects trading community, and I am back with another inspirational educational video, also a trade recap. This trade recap is based on ITE's OTE fib trading. Um, I'm kind of drawing more to his OTE pattern recognition strategy, just because the rules are um, a little bit more, I'll say, precise, if you will. Now, the rules are this: between 8:30 a.m. to 11 a.m. Eastern Standard Time is the time that we should be looking for the OTE pattern recognition. All right. And what we're looking for is for price in between that time to run either yesterday's high or yesterday's low. All right. And we're looking for a pullback to the 62% retracement level, entering into the trade there with our stops below the 100 level. All right. Targeting a negative 0.5 deviation, a negative 1 deviation, a negative 1.5 deviation, and finally a negative 2 deviation. All right. First, partial profits are taking at the negative 0.5 deviation if it gives us 15 pips or more. Now, that part of the rule, I am kind of tweaking myself, because usually with a fib trading strategy, I take partial profits at the 0%, right? And then partial profits at negative 27, and then partial profits at negative 68. So I'm kind of playing around with that, but I pretty much typically would have taken profits at the 0%, right? My first partial profits, which I'll probably still continue to do that. But in the trade that I'm getting ready to show you guys, I did take partial profits just before the negative 0.5 deviation, just trying to follow his rules a little bit more. So let me go ahead and draw this out. So this dark blue line right here, okay, this dark blue line right here is 8:30 a.m. Eastern Standard Time, and this light blue line right here, is 11 a.m. Eastern Standard Time. All right. I marked yesterday's high and yesterday's low, and yesterday's high and low is basically the time between midnight Eastern Standard Time to midnight Eastern Standard Time. And let me show you what I mean. Let's go to the 1 hour. All right. I hope this looks okay. I know it probably doesn't with all these colors and me doing this on my phone, but this yellow line to this yellow line, right, is Thursday at midnight. Okay. It's between Wednesday and Thursday here at midnight, and between Thursday and Friday here at midnight. This is the low, okay, in between that time. This is the high in between that time. And so let me drop back over to the 5-minute chart. So now you guys can see that between 8 a.m. 8:30 a.m. Eastern Standard Time and 11 a.m. 11:30. I'm sorry. Between 8 a.m. Eastern Standard Time and 11:30 a.m. Eastern Standard Time, the SPX 500 ran above yesterday's high. So what did I do? I took out my OTE fib retracement tool. Let's see if I can get this. All right, go there. And I drew it to this high, right? Because if you look, the single candle, okay, made a low, right at 8 a.m. And then the next candle made the high. A low, the way that ICT has defined it, is a low that has a higher low to the left and a higher low to the right, okay? A high is a high that has a lower high to the left and a lower high to the right, right? Now, so I drew that out, all right? Price came down into the 62%, okay? So now let me put on my position tool. See if I can do this. Here, I'm just going to base it here. I tell you what, I'm sorry, guys. I am going to do this. Take the magnet off. Okay. All right, so let's try this. Oh, I don't need that anymore. I'm sorry. Where is it? Where is this? There we go. All right. So, I'm sorry, guys. I'm so sorry about this. I'm just trying. Okay. All right. So, what I was doing was looking for long position. Okay. Got in here at the 62. Okay. Stop was, you guys pretty much know how to do my stops. Going to 100. Okay. Then I add 50 points or 5 pips. Okay. To the stop level. Okay. Now, I was kind of hoping it to be a day trade. All right. All right. How ICT, what's going on here? Okay. How ICT defines, because you guys can even see, you still can see my alert there, because I was out in the field today. How ICT explains a day trade is that once price gets to that -2 deviation, you want to go ahead and close out all your profits. So that's what I was looking for. Now, I drew out the fib. Get this off of here. Now, I drew out the fib. Okay. It came down here to the 62%. All right. And actually what I did was, guys, I went down to the 1 minute. And I took entry, and I'm gonna make this look good for you guys, but all right. I went down to the 1 minute and I actually took entry on this 1 minute bullish engulfing right here. Okay. That's actually what I did. I got in right there. All right. Now, price went up. I was in pretty good profit here, and I was trying to stick to ICT's rules and waiting for the negative zero point 0.5 deviation to be reached before I took partial profits, right? And price started retracing back on me, all right? Here. Now, the whole while I'm thinking, I was like, man, I should have took profit. I should have took partial profit at the zero mark, right? Like I normally do. I'm telling myself that. And then in the back of my mind, I'm playing ICT's voice in my head, him saying that either he's right or he's wrong, and he's just gonna let it play out. So I was like, okay, either I'm right or I'm wrong, and I'm gonna let it play out. Luckily, all right, it did continue to go up in my favor. But what I did was I noticed that once I got up to the negative zero point 0.5 deviation, I saw this um, bearish engulfing right here, right? And so after that form, I went ahead and took partial profit. I moved my stop 1 pip into profit, and so and when I took partial profits, all right, I took about 75%. Right, I took about 75% off of the trade, right? And I still had 25% running with 1 pip, with my stop loss 1 pip in the profit, right? So I'm holding it, thinking that, man, you know what? Maybe I'm gonna get this day trade because it was um, NFP. NFP didn't come out so great, and so uh, maybe the S&P is gonna run up. Now, guys, keep in mind, like in my previous videos, I told you guys that I am expecting for the S&P to continue to go to the downside. Um, Number one, because I'm typically a supply and demand trader, um, and there is just tons of unmitigated demand as well as imbalance that the market is leaving behind. I go into a whole spiel. Just check the other videos. All right. So I'm still expecting for the market for the S&P 500 to drop. All right. But at the same time, I'm thinking, well, it's not going to go where I think it's going to go right away. So we can still have a pretty good bullish day. But anyway, so that's why I'm kind of expecting for it to get to the -2 deviation so I can go ahead and close the trade out. But today it pretty much ranged like all day. And then in the afternoon, you guys can see during the no trade time zone, which is 12 p.m. Eastern Standard Time to 1 p.m. Eastern Standard Time, the market finally came back and it stopped me out while I had profits inside. I had 25% inside of um, my 25% stop loss in profit. So, in all actuality, the amount of pips that I got were, let's see, it's going to be somewhere. Let's see, let's get that full amount. Which was still a really good trade for me. I think, and I'm gonna make this bigger, but let's just make it bigger now. I'm sorry if this video is going too long for you guys. All right, so I got 309 points out of the market today. All right, so, and that's based on 75% partial profits here, right? and then the 25%, 1 pip. So we can actually add 10 more points to this, which I will put us at 319 points, right? Or 31.9 pips in total. Was the total that I got today trading the OTE pattern recognition, all right, model that ICT has released, in which it was about, he did the OTE pattern recognition series about a year ago, and then he also released an OTE training. I think it was maybe like anywhere between 2 to 4 years ago. It's on his channel, so you guys can check it out. But this is pretty much how he does it. This is based on his rules. The only thing I would probably do different is to go ahead and take partial profits. All right, once we get to the 0 mark here, right? I probably would not put my stop loss in profit here. I would just take those partial profits, and if it comes back to stop me out, whatever the difference is between the stop out and the partial profits, that is what it is. And then as price begins to trade higher, um, move my stop based on market structure shifts that has like finesse liquidity and then pushed up. All right, he also explains that too. So basically, you'll want to put your stop loss in this, like for this example, for a buying situation, you'll want to put your stop loss, let's see, like below this low, okay? All right. If the market is going up, like once it pushes up, you want to go below this low, because this low would have ran these lows, like finesse the liquidity of these lows and then pushed it up. So you would want to put your stop loss below that low, because again, it has finesse liquidity and then it broke structure to the upside, and then vice versa. If you're selling it, you would want to put your stop above, like, let's say for instance, this high, right? Because this high basically finessed the liquidity of this high, and it broke market structure. So my stop would go there. That's how he explains it. So that would be the only thing that I am going to really like do differently. But again, I like trading this because you have a specific time, 8:30 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. You're looking for price to have ran yesterday's highs and yesterday's lows that were created between uh, midnight of the previous 2 days. Okay. Um, you're looking for that, and then you're looking for that pullback within that optimal time, right? And so that's really what it should be. It should be the optimal time entry, because he says the most important thing is the time and not the retracement, right? It's the time of day and not the actual price action, right? So, but we do marry the time of day along with the price action. All right. So guys, I'm sorry if I kind of rambled on, but I hope that this video was helpful for you guys who are looking to trade the OTE pattern recognition. Maybe the way that I articulate, it resonates better with you. But anyway, I had a very good trading week, guys. This is a supply and demand channel. I'm pretty much a supply and demand trader. However, with the changing of my personality, I think I prefer to go ahead and do these quick scalp type trades. Um, um, the ICT 2022 mentorship model, like I love that. It he typically did it for the indices. I'm an indice trader. You guys can watch my videos. I've been trading the S&P 500 or the SPX 500 for the longest, because I really have an interest in the stock market, but I like trading it with an ECN broker because of the low spreads compared to the E-mini, right? Compared to any of the future contracts. I I can come in here with the $10 account and run that account up. Um, it's just, you know, if you guys were born with a silver spoon in your mouth, hey, I get it. You have the money to do what it is that you want to do. I was not. I'm just a regular guy out here, trying to make money how I can make money and take care of my family. So I enjoy trading with the ECN brokers. Um, and yeah, I mean, that is what it is. So again, I apologize for the ramble. I hope this video was educational and inspirational for you guys. I was up 27% on my account this week alone, trading ICT 2022 mentorship model, as well as his OTE pattern recognition series model. And like I said, I think I'm going to be going to the OTE pattern recognition. This is the OTE pattern recognition is just not for indices, but it is the same rule, guys. It's the same rule for any market. All right. He talks about it: crypto, forex, indices. It's the same rule for any market, right? 8:30 a.m. to 11 a.m. You're looking for a run of the high, run of the low, looking for that pullback into the 62% retracement of the fib, looking to take partial profit at the negative zero point 0.5 deviation if it yields you 15 pips or more. Right, this is based on ICTs, right? Those are his rules. And taking partial profits at the negative, also taking partial profits if price reaches up to the negative 1 deviation, the negative 1.5, and the negative 2 deviation, right? But he also says, again, make sure that you pay yourself. So I will be paying myself at the 0 deviation, if you will. I mean, it's not a deviation if it's 0, but I'm going to be taking my first partial profits at the 0 deviation mark, and I'll leave my stop loss where it is. But once price gets up to the negative 0.5 deviation, then I'll begin to look for places for me to put my stop loss in a profit. So, all right, guys, again, I hope this video has been educational and inspirational. As always, please remember, if you're not a subscriber, do me the honor, becoming a subscriber, like the video or dislike the video, depending upon how you feel about it, and also comment below. All right, until next time, if you stay in God, you will stay in control. Happy pip fishing. Bye-bye.